Hello and welcome to FX Acrobatics. I am the Acrobat, and today we'll be looking at basic ICT patterns. Those are the order block, the fair value gap, and the breaker. Now in previous videos I've been talking a lot about these structures, making a lot of references to them. So I thought today maybe we'll take some time and just have a look, so that as we proceed with all of our analysis, we maybe have the same idea on such concepts. Okay, so I'm not going to be giving too many details about the structures, as ICT already does that on his channel and even on his mentorship. So I don't want to find myself stuck with some copyright stuff. I just want to show you the basic structures, and then the next time I talk about them, at least you have some kind of idea what they are. In fact, you don't need to know too much about them. You just need to know that once they are there in price action, they are going to affect price one way or the other when it gets to those levels. All right, let's start with the fair value gap. So here I've marked out a fair value gap. Why is this a fair value gap? Okay, see this candle here, this down close candle. This is the low of that candle right here, where this rectangle begins. And then you have this down close candle as well, and then you have this up close candle. Now this up close candle is high, this one right here, the rectangle touches that as well. So this space in here, there has been no trading before and after this candle in this space. So this creates an imbalance in price, and that becomes a fair value gap. Now as you can see, when price went into that, it was rejected and really went down. So this is some kind of resistance level now. So that's a fair value gap. Now there are two types of fair value gaps. There's the BISI, so that's buy side imbalance, sell side inefficiency. Now this candle here hasn't completely closed, so it's actually wrong for me to call this a fair value gap yet. If there was another candle here and you had this right here like this, that would qualify, but you get the point. I just wanted to show that you have this candle is high here and this candle is low here, so the wicks do not overlap, and that makes it a BC. Another example, you have a SIBI, the sell side imbalance, buy side inefficiency. So this low right here, this wick and this wick down here, they don't overlap, and they have left this gap here, that price imbalance. Look at how this candle reacts when it approaches that, because it's providing some kind of resistance. This one too, right there, when it hits it, then it sells off. So it's a fair value gap. Here's another good example here of a SIBI, a BC. This high, that low, this gap between these two, that becomes your BC. Alright, here's another example of a SIBI right there. The candle here, whether it's an up close or a down close, doesn't matter. What's important are the wicks, that are these wicks overlapping or not. So you get your fair value gap like that. Alright, let's have a look at the order block. Now this one is an interesting one. This is a very important structure in price action, especially for ICT concepts. If you do not understand the order block, I would say it's pointless to even try and trade these concepts. Now the order block is a very simple but sometimes complicated structure, but it's complicated because people make it complicated. They sometimes confuse it with the engulfing candle, but it's not. I think I'll make another video where I compare and contrast the order block and the engulfing candle. It's not the same thing, trust me, it's not. Alright, so you have this candle here, this one, this down close candle, and then you have these two candles that engulf that candle. So this candle becomes the order block. This is a bullish order block. Now look at what happens when price goes down into it. This is the midpoint of that bullish order block, which is this candle. Look at that, then price takes off. Here's another example. That down close candle right there, that's your bullish order block. Why? Because see here, and then you have these two candles engulfing that candle. So it's not an engulfing candle. You'll see as we go on with the examples. All right, this is another order block right here. Why? You have this candle and then you have this candle, this one, not both of them, just this one. It engulfs it, so that one becomes your bullish order block. Now here's the interesting part where you can actually start to see the differences between the order block and an engulfing candle. See these two down close candles here. This is the order block. Both of them, they form the order block. Why? Because 1, 2, these are both down close candles, and then you have this one candle going up and closing above both of them. So that becomes your order block, and you can see it's verified when price gets down to it here and flies off, comes back, retests the order block right there. Very sensitive area. It's now providing some kind of support right here, see, and then it takes off. So that's your bullish order block. So I'm making a shorthand here of plus, meaning that it's a bullish order block. So I'll be using minus for the bearish order blocks. All right, let's have a look at the bearish order block. So you can see we are just reversing what we've been saying about the bullish order block here. Look at that. This up close candle is engulfed by this down close candle here. That becomes your your bearish order block. Here's another one here, this candle here. Now here's another interesting part where you can see that the engulfing candle has nothing to do with the order block. This up close candle here is engulfed by a series of down close candles. It becomes a bearish order block when this candle completely engulfs it here. So all three candles, they are the reason this candle is an order block. Look at what happens there right here. Very sensitive area, very sensitive. All right, so that's your bearish order block. Here are other examples. See, in this case we have two of them right here. Those candles right there, they're engulfed by these two down close candles. Look at that here. This comes into almost the midpoint of that order block right there. So that's a bearish order block. And here's another example. 1, 2, 3 candles, up close candles. Very important. They have to be the same type of candles. So you have 1, 2, 3 up close candles, and they are engulfed by this single down close candle. That becomes your bearish order block. All right, let's have a look at the breaker. Now this is an interesting structure. It might take time to understand, but once you understand it, it becomes second nature, very easy, and you can predict what price is gonna do when it gets to that point. So the breaker represents some kind of market structure shift. You see here, price has been going down, 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 and then all of a sudden it changes tune and it becomes bullish. Now, when this candle here is violated by this long up close candle, when it's just engulfed by that, it becomes a bullish breaker. This is your market structure shift. Why? Okay, it's very simple, but sometimes very tricky. So prior to this point, this swing low here, see the swing low here, you have a swing high right here. You have a swing high, you have a swing low, you have a swing high. Now the highest candle here, the highest up close candle is this one before the swing high. You have this one, and then this highest swing high candle just before the swing low is formed. We'll be looking at the up close candle there that will be violated. Once that happens, this candle breaks that market structure right there, so it becomes a breaker. This candle becomes a breaker. So this is a bullish breaker. So when price returns into it, it will see some kind of support and be propelled all the way up. Now this is even more interesting at this point here, because you can see price goes down into the breaker. When it gets down there, it finds that this level is actually a bullish order block. So you have some kind of confluence and price takes off. Let's look at another example to get a better feel. This low, this swing low here, what's the highest swing high prior to this swing low being formed? We have these three candles here. They form that pattern of a swing high. So this candle is the highest up close candle. So when it is violated to the upside by this candle right here, we get our market structure shift. Now we know that we are in bullish territory, because this was going down. We had that swing high right here. That's a lower high, lower low, higher high. That's a breaker. When it's violated right here, this candle, the highest up close candle, becomes our breaker. You can see the sensitivity in price. Alright, let's look at the bearish breaker. Here we have the swing low, 1, 2, 3. So these three pattern, these three candles, these three, this is the lowest down close candle prior to this high in a swing low pattern. So this candle, when it's violated here, it becomes our breaker. Look at the sensitivity when price tries to return to it here. And then there's another instance here, when price returns to the breaker right here, it's rejected. So when the breaker forms, it's some kind of reversal that is taking place. So there are other tools that you can look at to get your confluence. In the previous video, I talked about SMT divergence. So you can also use that to validate your breakers. You can use commitment of traders report. We'll get to those as well. But yeah, this is the bearish breaker. Here's another example. See this swing high here? This is the highest point, right? It's the highest candle, swing high right here. And then we have a swing low right here, but the lowest candle prior to the swing high is this one right here. So this is our breaker. When it's violated right here, it becomes a breaker there. All right, I hope that makes sense. Now I've covered just the basic ICT patterns. There are more structures that we can look at, but I believe with this you can really make a living out of them when you practice ICT concepts. So most of our setups, as we demonstrate and backtest, will be using mainly these three patterns. If you're still not convinced about ICT concepts, I don't know what will convince you, but I will try my best to work together with you, and we keep on backtesting. We are still going to do a lot of backtests, and we're going to fill up this channel with a lot of videos with evidence that these concepts work. And if all this time you have been trying and you are not profitable and you are looking for the way to do this thing, let me tell you right now, this is the way.